It's January the 21st, 2008, Gray Monday, preceding what will likely be a Black Tuesday open in the stock markets of the U.S. equities markets. We're looking at an Asian contagion situation. The Asian markets are down very significantly, bounced a little bit off of their extreme lows, but still down 5 to 7% overseas. And that has taken down the futures for the U.S. stock market on this Martin Luther King Day when the markets are actually closed. The Dow is down 620 points, or about 5.5%, as I go through this video. And I thought we'd take just a few moments to update not only the newsletter subscribers, but also the folks out there who follow some of my columns and writings in the public domain to talk about what is about to happen and some likely scenarios coming into Tuesday's session. This is going to be a pretty epic event, and it'll offer a lot of opportunity and a lot of risk for those who are uninformed as we begin trading again in the beginning of Tuesday's session. As I said, the market down over 600 points at this point puts us in an interesting place in terms of government intervention. Bernanke and the Federal Reserve have already stated that they plan to lower rates. My guess is that they will do so in the morning tomorrow, if not the afternoon today. Probably, I'm looking at 8:15 to 8:30 tomorrow morning as being prime time for them to announce a surprise rate cut. This is likely to produce a fairly significant gap reversal. I'm not sure whether the market will gap down and then reverse up, or whether it will gap essentially up off its intraday lows today, even though it's not on the chart. We're looking at the diamonds down here just above the 115 area. It's extreme bar if it were able to form. If we go back and look at a previous scenario, very similar situation, go back in time, you can see here the market closed on its lows and then gapped up and squeezed back to the upside. I suspect that's what we're likely to have. It will be very interesting to see if the Fed does not come in to save the day. I think then we're likely to see an extreme sell-off of fairly extraordinary proportions. The market could literally gap down 8, 9, 100, maybe even 1,000 points if the Fed doesn't come in. So if that scenario unfolds, I would expect to see a great deal of intraday capitulation as the margin calls begin to really fly. And at that point, I would begin to look for an intraday reversal. So for our newsletter stocks, obviously we have been 100% short throughout this downturn, been doing very well. We've got Google's short from the Active Investor newsletter just near the to its $600 profit target. I would expect to see that gap down and would certainly be quite aggressive to take profits into any gap down that occurs there. In terms of the longer trades, the short in AT&T, we've seen some fairly extreme movement to the downside. I do expect to see a wiggle there. But once again, if we get extreme gap downs in these stocks, I'm talking 3, 4, 5%, probably would be wise to take to not look a gift horse in the mouth, take the money, and then begin to reestablish the same short positions into a bounce later in the week. The short in eBay, similar situation, steady selling, starting to show a little bit of exhaustion here. If that reversal of the last 3 days has brought in a lot of bulls, that will also tend to help shock it to the downside. We could end up with a very strong disaster gap scenario in eBay. If that does gap down, I would probably give it half an hour just to let the long's pain kind of be felt in full effect, and then be looking at a cover in a windfall type scenario in eBay. Finally, the short in Honeywell from the Active Trader newsletter, been meandering to the downside, and that too is poised for a gap down. Best case scenario would be it gaps into these previous lows. I think that's a bit extreme and a bit optimistic, but it's really hard to tell. At this point, the market is really in an extreme mode, and just about anything could happen. So, looking at taking off some of our profits from the open trades that were on the short side, and some longs in the Active Trader to look at too. Once again, if the market gaps down extremely, it might damage those patterns. So that's really the only risk I see going into Tuesday's session. For the rest of you, if you have your shorts, I'd definitely be looking for an excuse to take profits. Begin looking at bounce exposure, as I think the market is very capitulatory at this point. And certainly you can see the blood in the streets if you start to look around at some of the message boards. And there was one YouTube video that's been making the rounds of somebody who'd lost a serious amount of money and was essentially going into an apoplectic fit as the result of that. So with that, when that kind of public dismay begins to kick in, that's usually near a market bottom, and I think the pain is so extreme especially coupled with the government intervention, if that indeed occurs. It'd be a pretty good time to take profits and begin looking for long exposure once the dust settles later into the week. Obviously, newsletter subscribers have done very well out of the last couple of weeks. If you'd like to join their ranks, I invite you to check them out at www.boyoder.com. Click on the merchandise link, and there's some information about the Active Trader and Active Investor newsletters, which are the two I publish that deal with the U.S. equities markets. For those of you who are interested in learning more about developing your own trading strategies and would like to gain some insight on how I do so and really develop and hone the edge inherent in any profitable strategy, check out the March 1st Strategy Development Seminar. Pretty excited about that. This is going to be a first time for this format. Certainly something I've done with my individual consulting clients again and again, but never done it in a group setting, and it should be a lot of fun. What we will do on March the 1st is spend a day looking at several trading ideas, analyze their edge or lack thereof, and the ones that are potentially profitable will build a profitable trading strategy around. So rather than picking a seminar where someone is just going to teach you an already established trading style, those of you who've been trading for a while know anything that's out there and begins to be disseminated amongst the public loses its edge gradually over time. So you'll actually get to be on the cutting edge at this seminar of a new strategy development session, and hopefully you'll be able to walk away with a couple of different trading ideas to implement immediately after the session's over in the week that follows. So for more information on that, you can either email info, I-N-F-O, at boyoder.com, or visit the website www.boyoder.com and click on Live Events. As always, thanks for listening. My name's Bo Yoder. Good luck and good trading.